Hello everyone, this is Gilbert Gelad. I'm talking to you here from CPLSPA downtown Orlando. This is Tufts on Tax, where all your questions to taxes and tax laws and tax issues are answered right here with Mr. T. Scott Tufts. He is the expert and the master when it comes to tax law. You can call us at 877-647-7887. Again, that number is 877-647-7887. And also it's going to be on the YouTube banner if you're watching the YouTube channel. It will be in the bottom of the screen. You can also hit the subscribe button so you can get all the episodes, and hit the bell button also so you can be alerted when it comes to the episodes. You can also email him at stufts@cplspa.com. That's stufts@cplspa.com. Hello, Scott. How are you today?
Hey, good to be with you.
Good to be with you, too. And today we have a hot topic about Form 7203. What can we talk about that form?
So, again, our small businesses out there who operate as an S corporation, so that could be an LLC that makes an S election, even one that is wholly owned. Our single member LLCs that we've talked about that can make an S election, or a corporation making an S election. But usually these are the closely held smaller business types. So they deal with complexities of tax. They have to do a separate return, an S Corp return called a Form 1120S, as in Sam. And then it gets a K1 to the one owner or more than one owner. And then that goes on to your personal return. S Corps of this type have historically had an interesting thing occur with regard to their basis in the stock. So do you know what I mean by basis in their stock?
No, what does that mean?
So you have to have a way to determine what your stock, what value you have in your stock, the money that you have in your stock. So, for example, if you form an entity and you have capital in the business, and the money makes money during, after a while, you start with your initial capital. You, on top of that, add to it its income that's accumulating in the business, and then that will come to the benefit of increasing your value of your stock. And then if you take money out of the business, that will decrease your stock. But one of the things that S Corps are required to do is also look at the loans that they make to the business. And that can give you what we call debt basis. So what's neat about all of this is that the IRS has historically had the tax form for S corporations just produce worksheets. So you know what I'm saying? Like when you're doing your tax return, you may have worksheets that they give you. And this raises an interesting question. The worksheets are for your benefit. So let's back up and unpack something about tax returns. When you get your accountant to do your taxes and you get your taxpayer copy of your tax return, meaning that you get a nice little packet, and let's say you have your own tax return from your accountant, it will say taxpayer copy. But included in that is invariably a lot of worksheets and things that do not get filed with your return with the IRS.
Oh, wow.
It's kind of like your notes and, and helpful little things.
Yeah.
So I'm always struck by the fact that I will say, well, what's the IRS copy and what's the taxpayer copy? Because there could be a difference.
Okay.
So when you folks are out there and you want to understand this, you want to know exactly what the IRS got as far as which forms. And then you want to separately know what additional worksheets you have been given that do not go to the IRS. Now, many times you won't know the difference between the two, but this is a great example where something has gone from the worksheet side of things to an actual form. So that's what's happened. That's so shocking that we're talking about today, is that the IRS has now come out with a form. It's Form 7203, and they've taken the worksheet of preparing your basis in your stock to keep track of it every year, which they want you to do, okay? And now they have a form, okay? That form goes with the other form, okay?
So this form was in existence before, and then just they recently modified it, or this is just a whole new form?
So this is a whole new form.
Okay.
All right. And it replaces the 3-part worksheet for figuring your stock and debt basis.
Okay, I see.
That was normally included in the K1 instructions. So what our folks need to know is, just like the K2 and K3 things that are happening in that international environment, what's now happening is there's more forms coming to assist in the preparation of and attaching these to the return. So if you can understand what's going on here with the 7203, is they want you to attach this to your return when you're preparing this for the determination of your stock basis. Okay?
I see. Now, why is it important, you were saying, to have those 2 copies to know what went to the IRS and what did we get?
Yeah, because, well, believe it or not, if you get audited, the IRS will actually ask you for your taxpayer copy. Okay?
Oh.
But what they oftentimes, what they should only get is a copy of what was actually filed with the IRS, so you have an IRS copy. So many people don't realize, nor are they in a position to do that, but what they should always ask their accountant is, can you tell me what the IRS copy is, and then what is my taxpayer copy? Because many folks might get a lot of information and they don't know exactly how much got filed with the IRS. And while I recognize that many times it won't matter because it will be a worksheet that's made its way in and actually would be helpful, I've had situations where an IRS agent is really looking at whether or not your return has been altered from when you got it from the accountant.
Oh, so that could happen.
So if you're the IRS and you say, please hand me your your copy of your tax return,
okay,
and you just pull it out of the accountant book, but you filed you changed that return, you got a problem.
So that leads me to the question.
Yep.
What are the consequences if we don't file this form, and if we don't file it correctly?
Well, right now, since it's a brand new form, the thought process is that it's for use in the 2020. I mean, it just got implemented on December 2021.
Okay.
So we're talking about a form that is going in for the 2021 year. Now, there's no penalties asserted with this, but do not be surprised if you have a situation where they ask for the form in an audit or a review of your return. Because remember what we talked about. The K1 and the 1099s and everything, they look to match those and find those automatically on your return. The computers that are running on all of this stuff that's scannable is looking for a mismatch. So if you've got an item that's going from an entity to you or whatever that is connecting the dots and you don't have it on your return, it's going to flag it and pull it. Once you get pulled, then you're kind of going down the road where they can ask questions or even audit the return.
So when do people, what situation that they would fall into with this
particular form
to come and hire you to help them?
Well, one of the concerns I have about this form, so let's kind of back up. The form outlines as many as 4 situations where you have to use the form 7203. And this, in other words, you don't have to always file it when you're an S corporation shareholder. However, if you're claiming a deduction for your share of a loss, okay, that wasn't allowed in a prior year or was allowed in a prior year, or the current year, or you're taking distributions from the S corporation that's a non-dividend, you've disposed of the stock in the S corporation, whether or not the gain is recognized, or you received a loan repayment from the S corp. Remember I talked about how you make an advance to your company? So you could be putting money in as capital, which is what we call at-risk capital. So you capitalize your business and it goes down the tubes. You claim a loss because you capitalized it and lost it. You put 10 grand into the business, it doesn't work out, you take a $10,000 loss. You got the idea? If you put 10,000 in and then you say, you know what, everything's going along okay, we're going good, then at some point you try and say, well, I'm going to make a loan, an advance to the company, right? I'm going to loan it an additional $50,000, and I'm going to enter into terms with my S corp to pay it back. You could do that, but now we got two different things going on, right? You got capital and you got an advance, right? So why this form is interesting to me, to answer your question, they've got a box. They got boxes here saying debt 1, debt 2, debt 3, right? And you see what it says here?
Yeah.
This is interesting. One box for formal note and one for an open account debt.
Yeah. I'll put that on the screen as
yeah,
well
you know
so
how
people
important
can see
that
it.
is. Do you know the difference?
Nope. We're going to find out right now.
Yeah. So, yes. So, obviously, they're looking to determine who has a formal promissory note and which ones are open account.
And can you define each?
Yeah,
each
sure.
one?
A formal note would be you enter into a promissory note with your own corporation,
Okay.
right? So that would be like a promissory note. I promise to pay,
To do this and
X
that.
amount. And under these rules, they have a reason for asking that, because if you're kind of sloppy or just want it to be more of a, I'll just keep putting money into the business, that's an open account.
Open account. Wow. I don't know why they would do that.
Well, they're obviously looking to, roll down on open account advances, and then think about this: you put a formal note in, and it says, "I'll make back, I'll repay it X amount so much," and you don't do that, then you're not adhering to the terms of the formal note.
I see.
When you don't adhere in the real world, when you don't adhere to the formal terms of a note,
What happens?
well, it's not good, right? Usually the creditor comes after you.
Oh, okay.
But when you're in kind of control of your own S corp and you don't honor the terms of the note, insist on the terms of the note, then maybe it's not a note.
Yeah.
If it's not a note, that might affect which part of this form it goes in, debt basis versus stock basis. So anyway, look, it's complicated, but the main thing we want for our audience to know is that there's a form in situations that they previously didn't have to do a form that's going to add to the burdens of being an S corp. And therefore, folks, you leave this episode with the idea of, hey, I heard about that, right? They got a form now to describe how to handle your stock in an S corp that you're going to have to attach to your tax return.
Wow. The more forms, the more.
Yep. Well, let's talk about
as
that.
if it's not already complicated.
So backing up what we were talking about, kind of another thing we were talking about now is there are forms. IRS asks you for a form even though they should have it already. You get audited, they say, hey, we'd like a copy of your return. Why? You're required by law to keep a copy of your return. So that's okay for them to ask for that, to see if you're complying with that. Because I imagine bureaucratically or responsibly, they may see a computer screen, but they won't have the pretty copy at their fingertips. Maybe it's on the screen or not. But for them to go get the original copy, it's much easier to ask you for it because you're required by law to have it. So I ask you for it, you give it to me, and if it looks different than what they got, that could be an issue, right? So our folks need to know that this is what happens out there. They ask for a copy. I'm letting everyone know you need to know whether it's a taxpayer copy or the actual file copy, because I've seen it where they hand them stuff and later we say, well, that's not even the taxpayer. That's not the file copy. Or I've seen situations where something got changed. That's a problem.
So we have to pay attention to
Yeah,
that.
100%. Because remember, at the end of the day, maybe the last comment to make is these issues are complicated. If you're going to rely on an accountant or preparer to do the tax return, how are you going to prove that you relied totally on the accountant to give you the right forms to file it properly based on the accurate information you gave the accountant? Because if something goes wrong and there's a mistake made, you're going to want to say, hey, look, what do you want me to do? I reasonably relied on my accountant. I gave him all the information, and there was a mistake made. Well, you shouldn't get penalized in that situation as a general proposition, right? But if the situation is different, where you didn't give the accountant all the information they needed, and they relied on you, then that's a different story.
Yes. You heard him, folks. If you happen to fall into any of these situations, if you have any questions, call Mr. T. Scott Tufts at Tufts on Tax here at 877-647-7887. Again, that number is 877-647-7887. Or you can email him at stufts@cplspa.com. That's stufts@cplspa.com. Now, if you're just tuning in or listening, this is Tufts on Tax, where all your tax law questions are answered here. Any trouble or any lawsuits or any issues with taxes you are having with the IRS, with employers, with employees, or anyone, there's Mr. T. Scott Tufts. He's an expert and a master of this tax law, so he can help you, and you can call him and email him about this. Now, Mr. T. Scott Tufts focuses on how tax forms and other issues impact people's daily lives in ways that are often overlooked or unknown. Certain tax forms like Form 1099, NEC, or Form 1099 Miscellaneous, or Schedule K1, or Form 8082 when filed, or even we're talking about 7203 when filed, can lead to litigation. Don't hesitate. Call him, email him, ask questions. Until next time, thank you and have a wonderful day.